Today, Australia's new government finally signals its crypto regulation stance. FTX revenue reportedly grew 1,000% in 1 year. Leaked documents reveal. India's crypto industry has faced a challenging year. Welcome to Magnum.Xtrading. This is Bryan. Cryptos exhaled over the weekend after Friday's steep price plunge as investors continued to chew over the latest inflation data and ongoing macroeconomic uncertainties. Bitcoin was recently trading at about 21,500, up more than 1% over the past 24 hours. The largest cryptocurrency by market capitalization plunged by more than 9% at one point Friday following an unexpectedly disappointing inflation report from Germany, Europe, largest economies by gross domestic product, and renewed concerns about the pace of interest rate hikes in the U.S. Declines in the U.S. housing market also left already anxious investors further on the edge. Markets will be nervously eyeing remarks by U.S. Central Bank Chairman Jerome Powell, who is scheduled to speak Friday at the Federal Reserve Bank of Kansas City Economic Policy Symposium in Jackson Hole, Wyoming. Powell may foreshadow the Federal Reserve's money direction at the September's Federal Open Market Committee meeting. St. Louis Federal Reserve President James Bullard has already said he's leaning toward voting for a third consecutive 75 basis point rate hike instead of a less than hawkish 50 basis points. Ethereum, the second largest crypto by market value, was recently trading slightly above 1,600, a more than 2% gain over the previous 24 hours, although far removed from the $2,000 threshold. Investors' enthusiasm for the next month's scheduled merge, the Ethereum blockchain shift in protocol from proof of work to a faster, more energy-efficient proof of stake, has cooled down, or at least temporarily. In a weekend to the Wall Street Journal, Secretary Chairman Gary Gensler renewed his call for crypto firms to comply with securities law. Gensler highlighted crypto lending firms' freezing of accounts and recent bankruptcies that have left investors beholden to legal proceedings. There's no reason to treat the crypto market differently from the rest of the capital markets just because it uses a different technology, as the chairman said. Here are the top stories. First, Australia's new government finally signals its crypto regulation stance. Australian Treasurer Jim Chalmers said that his government will improve the way Australia's system manages crypto assets and provide greater protection for consumers. Treasurer Jim Chalmers announced a token mapping exercise, which has one of the 12 recommendations in a Senate inquiry report last year on Australia as a technology and financial center. The report was warmly welcomed by the industry, which has been anxiously waiting to see if the ALP government would embrace it. Aimed at being conducted before the end of the year, the token mapping exercise is expected to help identify how crypto assets and related services should be regulated and inform future regulatory decisions. Next, FTX revenue reportedly grew 1,000% in 1 year. Leaked documents reveal the revenue breakdown discloses a 1,842.85% increase in operating income for FTX, from $14 million to $272 million in fiscal year 2020 to 2021. Audited financials of the said fiscal year show FTX witnessing a 1,000 increase in revenue, growing from $90 million in 2020 to $1.2 billion in 2021. This is claimed by CNBC, alleging access to the documents. The revenue breakdown discloses a 1,843.85 increase in operating income, and the crypto exchange amassed $388 million in net income. a 2,182.35% increase from last year's 17 million. The report further claims that FTX possessed at 2.5 billion in cash by the end of 2021 with a profit margin of 27%. And finally, Indian crypto's challenging year. Observers of the India burgeoning crypto industry expected to steep new taxes on digital assets to complicate the lives of investors and entrepreneurs. That reality has taken shape, although higher taxes have hardly been the only cause. The industry now faces the same combination of increased regulatory scrutiny, falling prices, and special circumstances that have plagued digital assets worldwide. However, this scenario evolves in the world's fifth largest economy by gross domestic product, may offer guidance for other countries facing similar fine, balancing acts in protecting consumers while nurturing crypto innovation. For now, the landscape has shifted in favor of a more restrictive environment. And that's all for today. See you.